Hey everyone, welcome back to Corporate Decoder, the place where we dive into the nitty-gritty of corporate filings. Today, we're cracking open the latest 10Q report from C3 AI. This should be fun because this report has more twists than a poorly written sci-fi novel. We're looking at C3 AI's financial report for the quarter that ended in January of 2025. C3 AI, in case you aren't familiar, sells artificial intelligence software to businesses, helping them do everything from predicting equipment failures to optimizing their supply chains. It's a complex business. But before we get started, let's make sure we understand that most of what we are going to be talking about is forward-looking. What this means is that they are talking about future hopes and predictions, and that we shouldn't consider them promises of future events. Now, like any good financial report, this one comes with a hefty dose of risk factors. C3 AI is laying out all the things that could go wrong so investors know what they're getting into. One of the biggest risks, profitability. C3 AI admits they have a history of losses and can't guarantee they'll be profitable anytime soon. That's a red flag for any company. It means they're spending more money than they're bringing in. They also say their business depends on attracting new customers and getting existing ones to buy more stuff. No surprise there, but it highlights the pressure they're under to keep growing. And of course, there's the competition. The AI software market is a crowded space, and C3 AI faces some serious rivals. Losing market share could hurt their bottom line. Here's a fun one. They mention the risk of regulatory investigations and litigation related to data privacy and security. In today's world, that's a risk for any tech company that handles personal data. It has the potential to hurt their reputation. Now let's dive into the financials. I'll scroll down to the good stuff. Alright, on the balance sheet, you can see that C3 AI has a decent chunk of change in cash, cash equivalents, and marketable securities, which are investments that can easily be converted into cash. This is important because a business needs that money to operate in order to pay its bills. Revenue, the lifeblood of any company. We see a good rise here. The company brought in about $99 million in revenue this quarter versus $78 million in the same period last year. Subscription revenue is still their bread and butter, accounting for a big chunk of that total. However, despite the revenue jump, they still had a net loss of about $80 million. This continues their history of not making a profit. While the company has seen an increase in revenue, they still lost money. And where did all that money go? A lot of it was spent on sales and marketing and research and development. These are big investments, which shows that C3 AI is serious about growing its business and staying ahead of the competition. However, the numbers also imply that a lot of capital is spent to stay competitive and that they aren't yet seeing as much results as they want. One thing to keep an eye on is their weighted average shares outstanding. This number matters because it's used to calculate earnings per share. In short, the more shares outstanding, the more the company's profits get spread out, thus reducing their earnings per share. It seems a lot of that comes from the company using $52 million in cash just from normal business. So what's the big picture here? C3 AI is a company with a lot of potential, but it also faces some serious challenges. They're growing revenue, but they're still losing money. They're investing heavily in sales, marketing, and R&D, but it's not clear when those investments will pay off. And they're operating in a competitive market with a lot of uncertainty, including AI usage. One thing to note is that they keep expanding abroad, but it's always tricky to jump into different countries with different regulations. It should also be noted that there is an ongoing potential risks for liabilities. But then comes legal troubles. It appears that C3 AI is being sued, as well as other actions such as the one against Enel Global Services, whom C3 is trying to get €2 billion from. While companies get sued all the time, lawsuits can be a major distraction and cost a lot of money, regardless of the final outcome. And a final thing to note is that Siebel, the CEO, has significant voting power due to the dual-class structure. This means they have a lot of control. This can be good but also concerning. In conclusion, C3 AI is an innovative company and their business is growing in many areas. However, there is still a lot of work to be done. Profitability seems to be a big issue. And with the rising competition and current economic conditions, there is a reasonable expectation of that to continue for at least a while. C3 AI is also involved in active lawsuits, and while the suits are not guaranteed to have any results, they do put stress on the company. While C3 AI's software is innovative and they are growing the company, investors should be aware of their slow rate to make money while depending on key staff and members who have major stakes in the company. Thanks for watching. If you found this breakdown helpful, please like, subscribe, and leave a comment below. What other companies would you like to see us decode? Let us know.